Hi, this is Peter from gameoftrades.net. I'm here to help you navigate through this crazy market and stay on the right side of the trade. Now, over the past few months, we have been bullish on the stock market. We've been expecting much more upside in the short term, despite having an extremely negative outlook in the long term. We've been saying this is a trader's market, not an investor's market, and we're staying away from stocks in terms of our long-term investments. We've been expecting one final blow off top move in the markets, and so far it seems like this move has started. Look at this. This is the Russell 2000, the small cap index, and look at the move that we've seen since the October low. This is a parabolic move to all-time highs. If we go to a weekly chart, you'll see the magnitude of this move, this type of action. This is just a vertical line going up. It never, ever happens in the markets. So we believe we are very close to approaching the top of the bull market. We're seeing more and more signs of the crazy market action that we've been expecting happen. So we're going to go through some of those signs in this video. So without further ado, let's get right into it. Now we're going to start off on a chart of the S&P 500, and we're going to quickly recap some of the things that we've been talking about over the past few weeks. We've been looking at this trendline resistance that started in 2009 here. We had multiple reactions along the way, and we expected this line to be broken at the end of the bull market. Once this line is broken, once this bull market resistance is broken, you get that final move up in the markets, catching all investors into that bullish trap before taking the markets back down and making that ultimate top. And so that's exactly where we are. We're starting to break that line. Look at this weekly candle here. We closed on Friday at all-time highs with a big green candle through that level. So that is the first time we've closed above this line on a weekly basis. So we've officially broken that trend line, and we've talked about this many times before. This happens in all bull markets. You have that break of trend line before the bull market topped. We had that in 2000 as well. And by the way, make sure to click on the like button to show some support on this channel. It really helps our videos get pushed out and makes all our research and effort on these videos worthwhile. So thank you very much for doing that. Now, we've also been talking a lot about the breadth, the market breadth, and we expected it to increase, right? As vaccine news would come out, we expected the market breadth to increase, meaning that more small stocks like the Russell 2000 and the RSP, which is the equal weighted ETF of the S&P 500, would start outperforming the actual S&P 500 and the growth stocks. And that's also something that's happened. This wasn't a crazy forecast. It was actually something pretty obvious. Once you have vaccine news, you're going to start seeing the beat down stocks outperform. And that's exactly what we've seen since the vaccine news. Look at the underperformance. So this is the IWM that I've just added, the orange line. Massive underperformance right here in March. And then you've got this massive outperformance. And this is a massive blow off top move in IWM. We expected the S&P 500 to do better in this blow off top move, but this can still be the case. We can still see much higher highs in the S&P 500 before peaking in this bull market. And so these big moves up are what tricks investors at the top of the bull market before starting that bear market. And we're going to talk about the sentiment in just a second. But a lot of people, a lot of investors are only starting to get bullish now, right? And that is crazy. Let's go back to IWM and see the size of that move again. This is not the type of move that you want to see in a bull market, right? This is worrying. This is bad. This will end badly, right? You want to see grinding type of action, right? During a bull market, you want to see steady growth of price, not these parabolic moves that just go up nonstop. This is going to end badly. And of course, this is taking the stock market to hypervaluation. This is something we've talked about a lot on this channel. Valuations don't matter in the short term, right? And I wanted to quickly show you this chart Wilshire 5000 to GDP ratio. That's a way of seeing how overvalued or undervalued the stock market is. You can see we're at all-time highs right now. Does that mean the stock market is going to crash tomorrow? No, right? We've been overvalued for years now. It doesn't really matter. And that's what I talked about in the last premium video I made. This doesn't determine short-term moves, but in terms of investing, and this is why we say this is not an investor's market, it's an overvalued market, right? And as an investor, you want to preserve your own value. You don't want to be investing in overvalued assets like the stock market, right? And this is all coming in the worst economic conditions in decades, probably since the Great Depression. So if you're bullish long-term on the stock market, then you are out of your mind. It makes absolutely no sense. Now, short-term, I get it. 100%, lots of liquidity, lots of skepticism, and this is what we've been talking about. This is why we've been expecting higher highs in the market, but long-term, this is bad. This is not good at all. Now, I just want to show you a quick article that we wrote on November 10th on gameoftrades.net talking about growth versus value, and this was the day after Pfizer came out with the vaccine. And from that moment on, from the vaccine news, we talked about a potential switch from growth outperformance to value outperformance. And that's what we've had since this huge breakout on IWM. We've had that blow off top move, and we've actually seen the NASDAQ underperform since then. Now, again, we're not trying to say that we always get things right. On the contrary, we are not immune to mistakes. And when we're wrong, you'll know about it, because we have very strong convictions in the markets. We like to say what we think is happening. And so during this leg up in March, we had strong convictions that this was a bull trap scenario, that we were in a new bear market. And we had 3 consecutive losing trades in March, and we had to completely rethink our thesis and actually buy the dip in June instead of trying to short. So don't listen to this video thinking that we have a crystal ball just because we got this move right. All of these statements are based on probabilities, and nothing is 100% in the markets. And that's very important for you to understand if you want to be successful in the stock market. And by the way, comment down below if you have any comments. It is always very much appreciated. We read all of them without exception. Now, we've been busy helping people out in the trading room. There's been some great discussions on there, but we're going to try and reply to more comments on the YouTube videos as well. Now, when does this mania end? When does this huge move up in IWM? This is a 22% move up. This is massive, right? The average yearly gain of the stock market is 7%. This was a 22% move in just a single month, just during the month of November. That is just insane. So when does it end? And that's exactly what we're going to be covering today. And if you've been watching these videos for a while, you'll know that we've said again and again and again, this rally is going to end when investors are bullish. And so we're going to take a look at that data to see if that's accurate. Every major top in history ended on bullish sentiment. You've got the top of the dot-com bubble here ending on a major bullish sentiment. You've got the top of 2008 ending on bullish sentiment. And now what just happened? We had a bullish sentiment spike. And this is why we've been saying this is not the top of the market. Until we have that spike, we're not going to be ending the bull market. It's very unlikely. So the bullish sentiment has spiked. What does that mean? Does that mean that we're going to crash straight away? No. Okay. Patience. It means we're getting closer. And I'm going to show you some examples of that. We're going to take a look at 2018 here. What happened? The bullish sentiment in 2018 peaked on January 3rd, right? So let's see what happened on the S&P 500. This was January 3rd, right before that blow off top. So it tells you a significant top is coming soon. And this was a significant top in the stock market. In fact, it marked the beginning of a major sideways consolidation in the stock market, but it's not an immediate indicator. From that reading at the beginning of 2018, you still had a massive move up throughout the next month. So that's something that we could still have more upside on the S&P 500, more upside on the NASDAQ, and actually pretty aggressive upside, because where you go from a period where everyone's bearish and nobody's positioned in the markets, and then suddenly you have an event that makes everyone flip to bullish, then you're going to see massive liquidity flowing into the markets in the short term, pumping the stock market up. That leaves the stock market overvalued, overbought, and fragile. And that's when you get the dump. So does that mean exactly the same thing's going to be happening in 2020? No, it doesn't mean exactly the same thing's going to be happening. Could the same thing happen? Yes, right? We could see one more move up during December and then a significant top. That is something that is within the realm of possibility. So that's the first indicator telling us we're getting close to a top. We've got bullish investors in the market for the first time in months. So that's the first indication. The second indication is the title of the video. And this is going to get a little bit more macro. It's going to get a little bit more complicated. So hold on to your hats. But I think you guys are going to like it, because this is really some crazy stuff that you can see on the charts. We're going to head onto a chart of gold, and I'm going to show you, I'm going to get onto a, let's say, 3-day chart of gold, right? So that's 2011 bear market, then the beginning of the bull market of gold, and this is the recent correction in gold. And I'm going to show you how you can use gold to predict interest rates. And if you can predict interest rates, you can sort of predict where the market is going. And that's actually crazy, but I'm going to show you exactly how that works. We're going to add interest rates on this chart. So I'm going to put the 10-year bond yield on this chart. And so the interest rates are the orange line, gold is behind, and you're going to see these crazy correlations. And you can go ahead and go on TradingView, click the link in the description, and look at this for yourself. You see this move up in gold from the bottom, right? Like a parabolic move off the bottom, and you've got the same parabolic move just a month later in interest rates. Same thing. Then after that parabolic move, you've got a move down in gold. What do you get just a month later? A move down in interest rates. Then you've got an uptrend, a steady uptrend in gold, and you have a steady uptrend in interest rates just a month later. This is all predictable. The uptrend in gold started here. The uptrend in interest rates started here. Then you've got this big move down in gold, right? Big bear trap in gold before the bull market. Look what happened to interest rates after that move down. Well, they went down as well. After that move down in gold, what did gold do? Well, it went up. What did interest rates do after that move down? Well, it went up. And what you'll notice is that often the end of the move of gold marks the beginning of that predictable move on interest rates. So the end of this move on gold marks the beginning of the uptrend in interest rates. Same thing here. End of the downtrend in gold here marks the beginning of the downtrend in interest rates. Same thing on this uptrend here. Big move up in gold marks, and the end of that move up marks the beginning of the move up in interest rates. So obviously this correlation is not perfect, right? No correlation is perfect, but it does give you an idea of where interest rates will go. So let's continue what happened here. Obviously, we had the health crisis, which kind of messed with that relation, but you can say that you had a move down from the top here to the bottom of that crisis. You had a move down from that top here to the bottom right there. Mark this drop in interest rates. This is, of course, completely messed up by the health crisis. So this correlation during this period is not perfect. But again, you've got gold rising there. And since then, you've got interest rates rising, right? And what has gold done recently? Gold has completely crashed. And this is something that we've been, looking at very carefully, because we have a strong bullish thesis long-term on gold. So why is gold getting hit so bad in this correction, right? That would be a 13% drop in gold. And that's because the smart money is starting to smell a deflationary event coming. You have to ask yourself, what's the point of gold? Gold is to hedge against inflation. So if investors think that there's going to be high inflation, they're going to flood into gold. So this is investors getting worried about inflation. And guess what? They're right. So inflation rises and you have interest rates rise at the same time. So what's happening right now? Investors are worried about deflation, right? They're not worried about inflation anymore. They're getting out of gold. So that suggests that interest rates are going to peak sometime soon in the next couple of weeks, in the next month, and they might start one more big leg down. And if interest rates go down, well, in these economic conditions, that means the stock market's going down. That means the economy is having a hard time. And that really isn't something that should surprise you. So obviously, again, this correlation is not perfect. I want you to take this all with a grain of salt. That's what technical analysis is. It's not a crystal ball, but we evaluate probabilities. And the charts right now are telling us that a top is coming sometime soon. A big market top. Now, I just want to finish the video by showing you a few of the conversations we've had on the trading room. We've had quite a few debates on the global markets and on the fundamental positioning of the economy in the 10 years coming. So if you enjoy those types of discussion, make sure to go and check it out. We've also had people ask us about specific cryptocurrencies, about real estate. So if you want to be part of our community, make sure to go and check out gameoftrades.net for that. Now, this video was sponsored by PrimeXBT. Now listen up, because I know this is going to be something interesting to a lot of subscribers. They have a Covesting feature on their platform. So you can go on their platform and find outperforming traders and copy their trading activity. So it's really simple. It's easy to use. It makes you see different trading strategies, different portfolio diversifications. So it can be profitable, it can be educational. And by the way, if you are a trader and you've become profitable through watching our videos and the content on the website, you can go on their platform and grow a following and receive success fees from your own trading. So make sure to go check that out. It's a very interesting feature. The link is in the description below. Now, I hope you guys enjoyed this video. If you did, make sure to drop a like on this video. In the meantime, good luck on your trading.